afternoon and welcome to Countdown right here on BloombergQuint Live. The markets have had an interesting day, if I can call it that, because we've had this massive bazooka, if I can call it that, from the Reserve Bank of India, and that's led to the indices, well, maybe not reacting as much, but banks still holding out. With me are Devina and Navneet. Good afternoon, both of you. But let me very quickly, since we have a battery of guests lined up, quickly get to the business and try and first highlight what's happening in the markets. And frankly, if you look at the index, it's autos which are dragging the indices, or the benchmark indices lower. You have a very different performance difference between the Nifty, the Sensex, as well as the Nifty Bank. I think a prime culprit out there have to be some of the auto names. So Hero MotoCorp is amongst the stocks which is correcting. Maruti Suzuki has a 3.5% downtick. There is weakness in Eicher Motors, about 1.5%. And then the non-auto names and non-banking names which are not doing well include a Bajaj Finance, a Bharti Airtel, HCL Technologies has seen some correction as well. So those are those few names which are looking slightly iffy in trade. But Bank Nifty is rip and roaring and it's helping the market stay afloat. So Axis Bank with this 12% up move is doing remarkably well for itself. There is some strength in ICICI Bank, about 4.5% higher, State Bank of India about 3% higher, and Kotak Bank and HDFC too are holding out. And amongst the non-banking names, the likes of Coal India and NTPC from the PSU pack are doing slightly okay for themselves. The world markets too, slightly iffy, Dow futures slightly iffy. So, well, let's see. We have our hands full for the next hour and 15 minutes. Good afternoon, Devina.
Good afternoon, Neeraj. You missed out Bajaj Finance. I mean, that one again, Bernstein at it, downgrading the counter, cutting its target price by more than half from 4,820 down to 1,740. And that one is the one that's taking a knock in today's session. But focusing on the mid-cap space, the Nifty Mid Cap 100 list comes up. You've got Bharat Electronics. That is up about 9.7%. Most of the financials are doing well. So you've got a Manappuram Finance, which is up 7.5%. Federal Bank is up 7.5%. IDFC First Bank is up 5%. AU Small Finance Bank is up 5%. LIC Housing Finance is up about 5.5%. What's not doing well is the rest of the pack. So you've got Adani Power down 6.5%. JSW Energy is looking weak. That's down 7.8%. Varun Beverages, after having a good day yesterday, is back down in the red, down by 5%, and real estate again takes a knock. You know, while most of the companies have been talking about how this probably will lead to some amount of demand for home loans, you know, you really don't see too many people going out to looking for bargain deals for houses at this time. Small cap index is doing slightly better, which is up about 1%. What's doing well there is MMTC, it's up 12.5%. Rampuccini, DCB Bank, MCX, that's up about 10%. A CAT, Care Ratings are some of the gainers there. Among the losers, Wellspun India is down 6.5%, Vakrangi, Future Lifestyle, Blue Star, and Kajaria Ceramics, along with the Chalet Hotels, down about 4.5%. The first day of the April series, let's see what we've got stacked up. Navneet, what's the setup looking like? Good afternoon.
Good afternoon to both of you, Neeraj and Devina. Yes, first day of the new series, and the Bulls will be relieved that, the March series has come to an end. It was a tumultuous series. But remember, we're starting on a very, very low base. This time around, the rollovers have been pretty much weak. But we're off the day's high. Remember, when we opened today, index was at 9,000 plus levels. But still, we're also off the day's low, which was at 85.22. So Nifty futures, I believe, still continue to trade at a discount. And the bigger discount is at Nifty Bank futures, which have started the series with 200 plus point discount. Let's see if that can get bridged or not. Though markets are trading with some bit of gains. You've got the India Volatility Index. It had cooled off in the morning session, but I guess now just about trading flattish at 71.5. Looking at the options data, I think in the next few days, expect a range of 8,500 will be an important level to watch today as well. 8,500 put has seen some bit of addition in terms of open interest, and also the 9,000 call. We did cross that mark, but there was some profit booking from those levels. That strike, 9,000 call, by the way, has added some bit of OI. But if you were to ask me the range for the full series, I think 8,000 to 9,000 will be the one. Just one stock future I want to highlight, considering the sort of recovery we've seen for Shriram Transport. There is huge build-up in terms of open interest right now. It's day one, 22% higher in terms of OI last when I checked. So there are some signs of fresh long positions also being created there, Neeraj.
Well, so that's the market snapshot. Quick conversations with eminent market voices. Start of the show with Bala needs no introduction, really joins us on the show with his thoughts. Bala, so good having you. Thanks so much for joining in. I presume you've also sent out some communication to unit holders and mutual fund holders as well. We'll get to the debt part in a bit, Bala. First, the actions that are being taken, RBI has done almost everything that it could in its arsenal. Do you think that is good enough to take a call on the market, or does it remain largely uncertain as we speak?
I think the way I think RBI has done pretty much the lines of what the industry has been recommending, both from the banking industry as well as from the mutual industry, to provide a liquidity facility as well as go for a significant rate cut so that it actually improves the interest rate environment as well as the liquidity position of the system. At the same time, they have, of course, come out with this new instruments such as targeted long-term repo window, mainly to provide a special liquidity actually to the corporate bond market, which includes capital market instruments such as CPs, NCDs, and CDs, whoever wants to, of course, sell because of some bit of uncertainty, and they can actually be bought out by the banks as long as they're able to avail the targeted long-term repo window facility from Reserve Bank of India. This is something quite been pending for long, and finally RBI has done that. This has actually achieved two things. One, it provides immediate relief to the bond market, which has been on the sell side for the last 3-4 days because the yields have shot up, and also created some kind of uncertainty, I think, how the next 3-4 days will go before 31st of March. Definitely this announcement, and again open the window today for availing the 20,000 crores limit from Reserve Bank of India, has given that it eased the pressure. But having said that, though, the regulation says that investment grade and above bonds, which essentially means all bonds which are rated BBB and above get qualified to be eligible under the scheme to avail to sell the securities to the banks to avail this LTRO facility. They should not restrict themselves only to buying say AAA securities such as PFC and REC kind of things. They need to, of course, extend this to BBB and above bonds as long as the short-term ratings are acceptable to them. And that's, I think, if it is made, then I think there will not be any more uncertainty as far as the bond market concerned.
All right, Bala, just want your sense on what happens to banks' profitability now. Obviously, this moratorium comes. Do you feel that because of the fact that repayments over these next 3 months will probably be a substantial sum, how do you think banks are going to handle it in terms of their own profitability?
Ideally speaking, it should not affect the profitability. Just a deferment of payment is not a default. If the payment has not come, probably the banks would have to treat it as that 90 days the period of cooling off period before you start recognizing. Such things are not there as per the provision that deferment of payment need not be necessarily considered as a default, and such a deferment of payment also need not necessarily to have a rating action. And both, I think, have been clarified very aptly in the policy today. Therefore, from the bank's point of view, there may not be any need for making any provision, except they have to accrue it for one more quarter and receive the 2 quarters money together along with interest payment, rather than calling it as a default of one payment not coming in. And they've extended this across all type of borrowers, including EMI from individuals. Therefore, it should not be seen as a negative. Or rather, it should not have any, ideally speaking, any negative impact on the P&L per se.
So, just want your sense on what was it that stood out for you in this speech, and that's the biggest positive according to you. There are lots of things that have been done. Obviously, now that you have a CRR cut also, which is down to about 3%, that straight away puts a liquidity of 1.37 lakh crores for banks to start lending out. But then, do you see a lot of demand for this money that the RBI is putting into the kitties of the bank?
Yeah, I think there are 2-3 things which I think RBI has done. One, of course, apart from the 3 what I just mentioned about, they have also given the MSF facilities where you can go and borrow from Reserve Bank of India at 2% lower than the repo rate, which again is something it is done with intention to reduce the cost of borrowing for banks on the one side. On the other side, they need to also, when you look at lending in the market, they need to also transmit this reduction in interest rates arising on account of the RBI policy should be given to the borrowers. So that's something which I think would remain remains to be seen. Having said that, I think the issue which could come from the banking system is the incremental demand for credit. If it doesn't come the way in which it's been, which they are used to operating in the market earlier, there will be some degrowth in terms of credit. And the banks may also go slow in terms of their personal loan kind of model that they used to have. Suppose there is a reduction in terms of demand for borrowing, even on the personal loan side, and therefore the credit growth in general comes down. We will probably see the high liquidity, low interest rate remaining for long, but not benefiting the financial institutions because they're not able to lend equally bigger and take advantage of the arbitrage opportunity. So that's something I think remains to be seen from overall system perspective. Definitely from RBI point of view, they have done everything that is possible to bring down interest rate, to increase the liquidity, to provide backstop facility, as well as create some kind of measures which will bring down the cost of borrowing for borrowers and so on and so forth. So now we'll see. It will depending upon how the demand comes back.
Yep, that's a big question, how the demand comes back, especially when the economy will be, when the lockdown actually ends. But Bala, hi, good afternoon. Considering the measures yesterday the government of India announced and today RBI, do you think this should assuage investors' concerns now? We've also recovered at least from the lower levels we've just seen of 7,500 on Nifty. Is it time to look at any fresh equity allocation?
We've been debating about this for last 4 or 5 days. Earlier, I think the mood was swinging from a broader market, large cap to actually look at mid and small cap companies. That was the thing which was going around for about 3-4 months back. But the kind of fall that has been seen in both the Nifty and Sensex and the huge correction in the large cap names, naturally the excess valuations, which was I think holding back people that got corrected, therefore the valuation become reasonably good. And price correction has been quite severe, 40% fall from the peak. Itself makes a case actually for coming back to the large cap funds. So we are seeing actually that maybe it's a good time to come into the large cap funds as well as the focus funds from an allocation point of view equity, having seen such huge corrections. Even the bond market has seen somewhat of uncertain period of the last 4 or 5 days. So with this move from RBI, definitely makes sense for people to come back to the fixed income schemes. And given the fact the growth is not going to come back in a hurry, interest rate is going to stay low. At the same time, deposit rates are going to be cut. That's why it makes sense actually come into the mutual fund fixed income schemes, given the fact that stability will drive the overall stable movement in the bond market as well.
Bala, just one last question. What does this do to the non-equity funds? Because until day before yesterday, until yesterday as well, we had seen the yields being substantially high. There was a lot of clamor for buying some of these funds because they were available at really good valuations. This changes the things a bit, right? The yields too, as I see on the corporate debt side too, have come off.
It's completely changed. The last 2 days was chaotic week. One is absence of players and absence of liquidity, and more people wanted to sell securities to create liquidity. And that actually made the yields skyrocket quite substantially. I think this RBI move definitely has brought on the yields by about 100 to 150 basis points across the yield curve. That's the immediate temporary reaction has come. But definitely even the short-term rates, which are spiked up as is about 9 to 9.5%, may also have got corrected. That in my view, I think probably would become a history such a high yield, which has just prevailed for about a matter of 3-4 days.
Okay, all right. Appreciate you taking the time out and speaking to us today. Thanks much for being with us.
Yeah.
That's the view from A. Bala of Birla Sun Life, talking about his thoughts on the market as it stands and the RBI's actions and what they did as well. Well, but as we said, a bit of a dichotomy in that how Bank Nifty is doing versus how the other benchmark indices, other two benchmark indices have done. Samit Chavan, I'm told, joins us right now on the show with his thoughts, and let's kickstart the trading wheel with him. Samit, good having you. Thanks for joining in. How are you viewing the moves over the last 2 or 3 sessions, and particularly in banks which are still trading very high? Would you take money off the table if you were trading long, or would you take the long home into the weekend? Just lost Samit Chavan a bit. We'll just try and get him connected in a moment from now. Keep in mind, that's the point that we're trying to make, that That's the question that we'll have for our guests, because even if you look at the markets right now, the Sensex has been very choppy, but still about 0.75% in the green. It's the banks which are ruling the roost in the session. And by the way, Bajaj Finance is now the top loser on the index, about 2603. So I did look at the patterns of some of the other NBFCs, two or three of them. M&M Finance may not have dipped into the red, but it's kind of dipped at the same time as Bajaj Finance too. So NBFCs by and large have pulled back a little bit, just that this one has the added pressure of a brokerage note that has come out today. But let that not be the determinant, sole determinant. It's a marquee franchise. Things are, in fact, if anything, improving with the efforts of the government and the Reserve Bank of India. And you never know. Most people or most equity investors and large investors have suggested that the bluest of blue chip franchises would be the ones that will come out the fastest out of this. So maybe don't let this necessarily be the only reason why Bajaj Finance would be choppy. Should or should not be in your portfolio. Hero MotoCorp is the other one, which just looks slightly wobbly. So, well, that's the picture. And Devina, just looks like that. It's financials, NBFCs, and autos which have played the prominent part in dragging the index lower today.
Yeah, and I just want to actually add, to a point that Bala was making with regards to the corporate bonds. And if you were looking at an HDFC Limited or a Bajaj Finance bond issue, just the 7.1% coupon, which has maturity till 2023, though now in today's session the yields have come down, but it's still at a very elevated yield of 7.6% for a Bajaj Finance. It's come down from a yield of about 8.08%, which it traded just on the 18th of March. So still very elevated, which comes to the point as to whether or not investing in bond funds, investing in some of these, high quality paper should be the need of the hour. Probably that question can be answered later at 3 o'clock when we get a perspective on bond funds. So stay tuned for that. But let me also bring in Mayuresh Joshi, who joins in right now with a fundamental perspective. Mayuresh, lots of things being done. The finance minister aiming to provide some reprieve to, the poorest to poor. The RBI coming in and stepping forth with its own war chest and its own measures that it can help out with. Do you feel that now things are sort of falling into place, or the fact that this is still a health issue is the primary reason why you cannot place it?
Afternoon, Devina. Afternoon, Neeraj. No, obviously, I think the government announcement yesterday was a huge help from a market standpoint in terms of building up the sentiments. And it was a much needed announcement made at the point of this crisis that we are talking about. This was followed up with a out of the box 75 basis cut, huge liquidity infusion into the system at this point of time, a moratorium period also being announced. So there are ifs and buts that are also going with the entire policy announcement. So for banks, for example, the CRR cut thereof, the expectations of getting funds at lower rates is a huge positive. Again, the provisioning is probably getting deferred for 90 days, so no immediate stress in terms of elevated provisioning required. There are also the downside risks in terms of passing on these rates. So the lending rates will obviously also come down. And there will be no buyers at this point of time, at least until the point lockdowns are on. So I think how the loan growth is expected to take place will also be a huge question mark, at least for the next few weeks. The third element, obviously, is any sort of asset quality deterioration will also probably be plaguing numbers specifically from a Q1 perspective. However, I think leverage companies also benefit significantly with this move, at least from a quarter's perspective, which gives them leeway from a working capital perspective. So putting things in perspective, my own sense is that the stimuli is announced globally, the stimuli announced by the government yesterday, the RBI announcements today. Yes, that's a huge sentimental push for the markets at this point of time. But the health issue probably still remains a very, very concerning point for global markets. We did a check, right? I mean, we did this report on finding Nifty bottoms, and what we found out in 2008 and the similar crisis in 2020, though that was the more financial leveraged crisis at this point of time. This is more health related. There are bounce backs which come through into the market at intermittent points of time, which we're witnessing at this point of time. But I think any news which supersedes all this over the next few weeks can also take Nifty or the Sensex level down. We've seen this in the past, and that might be a probability. So I think you need to be very, very cautious and tread very, very cautiously in these markets, Devin and
One more question now, and we had it HDFC Bank being at the tip of the stick of Bernstein a week ago. Now it's Bajaj Finance. Again, talks of unsecured lending, which is going to be a big issue. They've got the target price from 4,840 to 1,740. Management not really come out and said anything much, but HDFC Bank made all those clarifications, which I'm assuming probably would hold true for someone like a Bajaj Finance. What have you made out of it?
Obviously, I think, as we discussed in the last week as well, I think there is obviously a huge gap between price and value, right? The price obviously has come down for all the reasons that you probably mentioned. So there is concerns on all these counts. As I mentioned, I think because of the lockdowns, how is the loan growth or advances growth going to function or take place for these companies as an historical precedent. At the same time, if you're probably looking about the unsecured lending part, whether it's SME related or the unsecured credit card lending front, yes, there might be some concerns which might crop up in terms of asset quality issues. And both these factors probably play out in terms of how the balance sheet dynamics will play out, at least for a quarter or two. So yes, I think the price has clearly got played out. Is there value? Absolutely, yes. I think there is huge value in all these franchises. I think stable business models, great corporate governance, strong leadership. So anything that has a leadership trait, I think both these counters probably display that. But again, I think there is huge volatility in terms of expectations of how numbers will play out. So my take has always been that you probably just wait out for the quarter's numbers. I think, as I've been mentioning time and again, I think rallies might probably fizzle out on any news that comes out on a detrimental front on the health perspective. So I think these stocks definitely have great value in them at this level. But again, I think I'll be better off watching out for numbers and then probably taking a call over the next few weeks.
Yeah, and that's a very pertinent point Mayuresh, made. Let's wait out for the numbers. And, one moot point which Bernstein report has highlighted, they're not too sure about the recovery of the unsecured consumer lending book. And if history was to go by, the reason why HDFC Bank and stocks like Bajaj Finance in the last 7 to 8 years have done well, because of majority of the exposure being to the retail segment. And remember, banks like ICICI Bank, Axis, in the past few years, which have been going through that restructuring, had a lot of exposure to the corporate book. But on that note, let's also talk about the technicals. And before I go to Sameer Chauhan, I think he's back with us. I just want to highlight the rating agency stocks have gone up. So pull up something like Care Ratings. I think that's surged about 13 to 14% just in the last 5 to 10 minutes. And the others like CRISIL as well as ICRA, they've recovered from the lower level. So they're just about marginally trading in the green, but it's Care, which has surged quite significantly by about 13 to 14%. But let's bring in Sameer Chauhan. Hi, Sameer. Good afternoon. First day of the new series. We are back in the positive, recovered from those lower levels of 85.22 today. Are you taking any fresh bet either on Nifty or on Nifty Bank?
Hi, good afternoon. Yes, we have started the new series on a lighter note. If you see in terms of rollover, in terms of Nifty and Bank Nifty, both are below average. So in our sense, Nifty has already corrected quite a lot to 7,500, 7,550. We made a near-term bottom. So it was probably a overreaction. Any price action below 8,000, according to us, was a overreaction, and that's the reason market was extremely oversold, and we have seen a good rally in global markets in last couple of days. Clearly we also did manage to give a decent bounce back, nearly 15-18% from recent close. But at the same time, till the time we are trading convincingly below 9,500, which according to us would be a strong resistance, at least for next few weeks. So as long as we are trading well below that important level, the trend remains down, and at higher levels we are likely to see selling pressure. Considering the VIX, which is trading at 12-year highs, the volatility is likely to remain on the higher side. So 400-500 point for range for Nifty is quite obvious now, and for Bank Nifty it has now risen to 1,500 to 2,000 points in a day or a couple of days time. So at this juncture, index specific, if I have to take any particular call, as long as we are trading above 8,500, we believe that the possibility of Nifty again heading towards 9,000 is quite high. So in case of a dip from current level, probably towards 8,600 would make it a good risk-reward ratio. So one should wait and watch till the time we gives a decent dip toward 8,600. Then one can go long with a stop below 8,500, and the initial targets to watch out for would be around 8,850 to 8,950.
Well, it is turning out to be a choppy session, and Nifty is finding it difficult to hold above that mark of 8,700. We're back below that mark, just marginally in the green for Nifty. But Sameer, any thoughts on individual stocks, any strategies there? We've got stocks like Axis Bank, Bandhan Bank once again doing well today. Any banking specific strategy or any other stock strategy?
Couple of days back, we were bullish on HDFC Bank, which has around 815, 820. It has already risen quite a lot, 10-15% from that level, and from lows, it has given a good recovery of nearly 20%. So at this juncture, considering the overall volatility in banking space, we are avoiding, momentum trades at this juncture in banking names. But we would be, focusing on individual stocks from the pharma space. We are seeing some kind of divergence within the pharma space. If you see, Cipla has been doing well. It has been stable since last 3-4 days, but Lupin has been corrected since last 4 days. So Cipla is the one stock that we have been liking. 400, 402 has been acting as a sturdy wall since last 4 to 5 days, but today it has managed to surpass this hurdle quite convincingly. So from here on, we would expect Cipla to head higher. Immediate target to watch out for would be around 420, 424. In such kind of market, in case if you get decent up move, nearly 4-5% move, that's the time to book out your profits and trade with strict stop losses. So 389 would be the stop loss level for Cipla. And another buy call, contra buy from the metal space, which has not given any kind of recovery in last 4-5 days. But we believe that for Hindalco, 88, 87 would act as a very strong support. So we are a contra buyer in Hindalco purely with a momentum view. 96 to 102, these are our near-term targets. Can be bought with a stop loss around 87.8.
Okay. Those are some stock ideas from Sameer Chauhan. Even I think Pritesh Mehta is also here with us on the phone line. Pritesh, thanks very much for taking out the time. We got a 2-day rally on the index. Should one use these rallies to exit?
Good afternoon. Now see, we have been of the opinion, we have been saying the same to our clients, that 9,000 was a critical figure. That 9010 is a three-digit CAN number. And in today's morning trade, we tried to take out those numbers. And after that, we failed and we came back lower. And the whipsaw move continues to be in place. So I think we got that strong up move in last few days. And, rather than getting carried away by the momentum, we have to understand this market is going to provide whipsaws every now and then. We are not yet out of the woods. You have to be very nimble-footed when you trade index or even stocks in this market. So I think 9,000 would be the near-term resistance. On the downside, I'm keenly watching levels of 8300. So that is also placed around GAN numbers. So I think this is the range for the short term. And in today's trade, we showed some resilience when we came down, but we are lacking that conviction on the upside. So I think we have to take this market on a day-to-day basis, other than making a broader call right now, because 9,000 is a very difficult task for the market right now.
What stocks then, Pritesh, are you watching out for? Anything within the financial space that strikes the eye?
Now see, we had a good rally. In fact, in last 3 days, we had that outperformance of financials and the banking space compared to an index, benchmark index. So that was a welcome sign, a relief sign. But I don't want to get into that because, they have a tendency of running up by 20% in a matter of days. I would rather focus my attention on the stocks and sectors which have been a perennial outperformer. Something like FMCG, something like pharma. In this period of chaos, they have been standing strong. So, in terms of relative strength, they have been showing the signs of being the leader. So I would stay with them. HUL had a good move in last couple of days, but I think it's time to go into the FMCG second-tier stocks. So Britannia would be my best pick. I'm expecting another 8-10% rally in Britannia.
Okay. Those are some stocks from Pritesh. Watch out for, obviously, those index levels also. I just want to quickly, before we get in some more comments on what the RBI has done, while we're looking at the fall and the pace of the fall on the index, it's an interesting, just visually very interesting to see that the analysts community has not been able to keep pace with the sharp fall that we've been seeing on the indices. So all the projections that were made on the Sensex in particular have not been revised yet. So there's this big gap between the analyst forecast that has been made and projections that have been made for the Sensex, as well as the actual price move on the Sensex itself. So, if you have the chart and it will come up, you'll be able to see the big yawning gap between the steep fall on the index itself and the analyst community, which is lagging the consensus out there. But that's something you need to keep in mind. You can see that big gap, and you'll see that also getting changed very shortly. But a quick technical take, Pratish, on Bajaj Finance.
Yeah, just a minute.
Bajaj Finance.
Yeah, just give me a minute.
Okay.
Now, see,
okay.
as I mentioned earlier, this stock has been over the place in the last few months, and the way the financial stocks, the NSE financial services, the banking stocks have made a comeback. This has been a part of the pack and has done well recently. But I still believe that we are not out of the woods. In fact, a 9% fall in today's trade, it tells me that there could be more pain on the downside. We had the period of brief rally, brief pullback. But I think if you look at the underlying structure, the way it is trading below critical moving averages, critical GAN numbers, it tells me that there could be more pain going ahead. So I think we need to take this market on daily basis, because the kind of moves these stocks are making, it would be difficult to say that a particular level would be good enough to make an entry. But I believe that around 2,000 would be a great level to come back in this counter. Not right now, but.
Okay, that's your view on Bajaj Finance. Last 3 days, there was a good recovery, but I guess today's fall is largely going to Bernstein's report, where they have downgraded and cut down the target quite sharply, 25.60 for Bajaj Finance. All right, let's shift focus and talk to our banker as well and get his view on what do they make of the measures which were announced by RBI today. We've got Mr. Mahapatra, who's the CEO and MD of Syndicate Bank. Mr. Mahapatra, thanks a lot for joining us today on BloombergQuint. First, just a clarification, since we're reading a lot of opinions on social media about the 3-month moratorium which RBI has advised. Is it optional for bankers? Would you look at the cash flows of certain borrowers too before giving them that benefit?
I don't think there is any examination of cash flow. At least for my bank, we have decided that we will be giving it simply straight away for the retail and MSME borrowers. Will be a straight exemption, and it will be a plain vanilla exemption based on request, because as we know, in the corporate sector there could be a few people whose cash flows may not be totally constrained. So on a simple request and a simple processing, it will be extended. There will be no processing, cash flow examination, so on and so forth.
Right, Mr. Mahapatra, you said it will be a vanilla exemption for all the borrowers, irrespective of cash flows.
Yes.
Okay, and the other measures in terms of what RBI today announced, which will be resulting in injecting a lot of liquidity in the system, for example, cutting down on CRR and also 90 basis point cut on reverse repo, which we've not seen before. Do you think you will use that extra liquidity now, which will be at banks' hand, to lend out more?
There are two kinds of liquidity. One, liquidity in which the banks will be coming as intermediaries or channelizing agencies for giving some kind of a accommodative finance to the corporates, which is in the form of what is called as TLTRO by the RBI, where if the investment grade corporates apply or float a bond issue, we can borrow under the TLTRO window, and provided mandatorily all these money that is taken from RBI has to be invested in investment grade corporate bonds, NCDs and CPs. So this is one area. Second is that the CRR and other things which will release a general kind of a liquidity that has to be seen, because what will happen is that we will have to also keep it funded, the unpaid interest and term loan installments. So generally that would have added to the cash flow. That will no more be available for the next 3-month period. So that has to be funded. And there will be positive inflows through the CRR window and a few other liquidity measurements that RBI has announced. So we will have to see the net impact, and we will have to manage the liquidity in the bank.
Also, I think the bigger question so far has been transmitting the rates. RBI has been cutting down rates, and in the last 1 year, that's been the complaint. We've not seen any sort of credit offtake. So it's a sharp cut, which RBI has announced in terms of repo rate as well. Would you immediately transmitting it, or there would be some bit of lag effect?
No, as you know, after the introduction of external benchmark linked prime rate, the rate cut transmission is instantaneous for those products and those borrowers whose loans are linked to EBLPR or EBLR, as the bank may be calling it. So those things, immediate transmission will happen. The second thing is related to loans which are benchmarked to MCLR. Now, MCLR, as you know, has a component of cost of the funds of the bank, in which there is the long-term deposits of the bank and other things. So we will have to figure it out, that because at this moment it may be difficult for reducing the interest rate on deposits, because this will send the wrong signal. So we will have to find out how quickly, which is the demand of the hour, and we fully agree with it, how quickly and how completely we transmit the rate cut to the ultimate borrowers who are linked to MCLR.
Right. Mr. Mahapatra, good afternoon to you. Can you give us a sense of what the ALM mismatches could be, or if at all there will be any?
No, ALM mismatches, most of the banks follow the bucket method, where, assets and liabilities, depending on the remaining period to maturity, are put into the buckets of maturity, and the asset and liability are compared to find out that there is no greater than a 20% mismatch in any of the buckets. And there is also another thing which has been given some kind of a waiver, is that the stable funding ratio, which is that how much of the asset side is funded through stable funds, that is long-term funds, as well as savings bank funds, etc., from the retail sources. I think both these cases, most of the banks are comfortable, but there may be some banks, especially now. I think Reserve Bank of India governor also, in his concluding part of the speech, he told that please do not withdraw money from the private banks and all. So there may be some bulk deposits or something which are likely to be under some pressure of premature payment, because many of the corporates, if they had liquid funds, because they will have to sustain the liquidity of paying the wages, paying the regular electricity, etc. bills, while revenue may get deferred. There may be some pressure there, but otherwise I think the asset liability is managed on a continuous basis. There should be no issues in the near future.
So what is the quantum of repayments at Syndicate Bank, do you think that would be in this 3-month moratorium period?
The moratorium, we have made a back of the envelope calculation. It is coming to, because of moratorium, we will have to keep roughly around 22,000 crores of additional funding, because this is our regular inflow out of EMI payments and interest payments. Less, a little percentage of it is with delayed payment, which is again we keep funded, but that will be around 22,000 crore for my bank.
Okay, that's the amount of repayments. Sir, would you be participating in the LTRO to invest in corporate bonds then?
We keep on funding, but this will be a collaborative exercise between the relationship points, which are generally the corporate credit departments, because because of this restriction, that unlike the earlier LTRO operations where you can go and bid based on your own projections, here whatever money you get out of the bidding, you will have to necessarily invest in the NCDs, the CPs and the corporate bonds. So to that extent, one has to work on this. So we are assessing the demand from the demand pipeline from the corporates. Based on that, we will make a bid.
Mr. Mahapatra, we'll leave it at that. Thanks much for taking the time out and being with us today and giving us your thoughts. Appreciate your time. Well, that's the view from Syndicate Bank. As we speak, the markets, we highlighted just before the interview as well, of course, slipped into the red, and the Bank Nifty 2 has come off completely from the levels that it was trading at. It's still up about 2%, but it's substantially lower than where it was. Now, a few companies which have seen some pretty strong action in today's trade, and Mayuresh, some of the pharma and healthcare names stand out, and I would want a chart check from Samit Chavan on these as well. But first, fundamentally, Mayuresh, Granules India up about 11.5. Some of these private labs as well have moved up, and I can't quite figure out why this excitement around these labs getting a chance to test. If anything, there are not some dramatic profits that will make out of that as well. What's your sense on Granules first, and then some of the diagnostic companies like Dr. Lal or Metropolis?
So Neeraj, frankly on Granules, if somebody is holding on, he or she should clearly hold on to that. The logic is pretty simple here. Out of all the key molecules that they are doing at this point of time, whether it's paracetamol, ibuprofen, metmorphin, I think all these products are having pretty good demand. And what we're probably seeing in terms of the supplies from a raw material perspective, that very much is secured, at least at this point of time, from an inventory level for this quarter. And supply should probably resume, which probably means that the kind of impact that one sees from a profitability perspective should not happen. They obviously had booked around 32 odd crores for the Biocause JV, but again, the Omnichem JV probably should work out in its favor as well. The third element obviously is the finished dosages, which is almost 54 odd percent. APIs are 30 odd percent. So I think there should be a very, very reasonable EBITDA growth. EBITDA margin should hover around that 18-19 odd percent, which means effectively 18-19% ROE should probably get delivered over the next few years as well. So yeah, anybody holding on to Granules should hold on. For the diagnostics players, you're absolutely right. I think it's not a game changer in terms of numbers that the new test will probably offer. Yes, what they've probably done historically have been pretty decent at this point of time. If you probably look at the industry itself, it's almost $12 billion odd at this point of time, growing around 9-10 odd percent. And with all these concerns coming up, the only positive that I see is there might be some more testing once this all is over, in terms of either specialized tests or the semi-specialized tests that probably get carried out going forward, and a lot more people will be more proactive in probably doing that as well. So yeah, I think not a game changer for the diagnostics players, but anybody holding on to Granules should continue.
By the way, I must mark Bajaj Finance is now down 9.5%, 2526. So all the gains over the last couple of days, I think, are getting washed away. Yes, it's risen from the levels of 2,230 or 40 odd. So in that sense, there's still, from the recent lows, still higher. But certainly the excitement in the last 2 or 3 sessions has fizzled out. HDFC Bank might not be in the red materially, but it's still coming off. And by the way, Bajaj Finance is not the only one. At around the same price point or time frame that Bajaj Finance has come down, M&M Financial too, which was in the green, is now trading in the red. So a couple of missed chances right now, if you will. Samit Chavan, any thoughts here? Bajaj Finance, I think we spoke about. If we haven't, then please dwell on that a bit. And then M&M Financial too, which has lost its mojo today.
So as far as Bajaj Finance is concerned, we have seen massive fall, which is quite rare to see in Bajaj Finance since last many years now. But stock has corrected quite a lot, and some of the marquee names like Bajaj Finance, HDFC Bank, they have clearly given up in the recent sell-off. Stock would consolidate a bit, so we would expect a 10-15% range for Bajaj Finance probably for next couple of weeks, and then probably one should wait and watch how prices behaves around those important levels. As far as M&M Finance is concerned, this has been one of the laggards within this space before March, Feb also, and now with most of the marquee names correcting, this underperforming stock broke down below its important support level, and there has been no stopping reason for this recent decline. We would certainly wait for any kind of reversal if one wants to, buy this counter or accumulate this particular counter. We would avoid as of now. It's like a falling knife. Although the fall has been arrested around 140, but if this stock has to give any sign of strength, the stock needs to surpass 180 on a closing basis.
Okay, so that's the view around the two financial names. Now, we should be getting Sunil Jhaveri any moment right now to talk about the bond funds as well, because while what's happened to yields and even the corporate yields have come off a little bit, the interesting bit is what to do in a scenario like this with any kind of investments that you want to make in non-equity products, because the scenario has materially changed. The 75 basis point rate cut on the repo side and the RBI's closing statement, or the governor's closing statement, wherein that he said that all tools, conventional and unconventional, are on the table, definitely leaves room and maybe expectations of some more actions, and that should keep the yields under a bit of check, if anything, maybe head lower. So I think it'll be important. Do we have Sunil with us? I think we have Sunil Jhaveri with us. Sunil, can you hear me?
Hear you.
Okay, Sunil, hi. Good afternoon. Thanks for joining in. Neeraj here. Just wondering, Sunil, does this materially change the view around the non-equity side of the mutual fund space? If for somebody who wants to explore whether this is a good time to invest into debt funds, what would you advise? Where within that pocket would you advise, and why?
Sure. So, day before yesterday also we spoke about why debt fund investing is very, very attractive because of the spike in the yields, short-term spike in the yields. That story still continues. Yes, the yields have come off, but the spreads are still continuing to be on similar side. So just to give you an example, if 10-year PSU AAA bond was quoting at 770 yesterday, it is quoting maybe around 720, 50 basis point lower. But at the same time, RBI has cut the repo rate from 515 to 440. So the spreads between repo rate to the 10-year AAA corporate bonds still is remaining at similar levels of 230 to 25 or so. 10-year AAA, the 10-year GSEC, which was at 620 yesterday and currently today at maybe 615 or so. So that has not come off so significantly as was expected. But the spreads which continue to give us opportunity and the corporate debt fund side is the most attractive segment currently. So 3-year segment which had not really moved so much. It was the 1-year CD, less than 1-year CPs, etc., which had really spiked because of the lack of liquidity over the last 1 week, 10 days. So those who are in that liquid fund, ultra short-term bond fund, etc., they will definitely gain who had invested earlier and now going forward also because the capital gains will kick in. The month of March would have definitely seen advanced tax outflows, and also there was a liquidity issue which has been corrected by the RBI announcement today. So ample of liquidity going forward, plus the rate cuts and these spreads. And this 1 lakh of LTRO which RBI has announced and coaxing the bankers to say that you start investing in CDs and NCDs, etc. out of that money. Please don't hoard it yourself. Don't give it back to me at 4% reverse repo rate. Where will that money go? That should also chase the AAA segment right now because the risk appetite for these bankers is still limited. So the AAA corporate bond segment continues to be the investment segment which investors can look at. Longer the better, as we have been saying, think long term, because there is a reinvestment risk every time you try to get into the debt markets when the rates soften. So ideal way was that, just yesterday or day before when we spoke on the show, if you would have captured those higher yields and held on to it for the next 5 years, 10 years, you had nothing to do. You need not have changed your portfolio going forward at all.
Yeah. Sunil, but the counter is, now that moment is gone. So currently, today or on Monday, if somebody has a 3-year horizon, what category in the debt fund? One, should one use the debt portfolio, and therefore what category within the mutual funds on the debt side would you advocate?
Short-term plans, which is again on the debt segment only, and that has a 2.5, 3 years or 2 to 3 years average maturity. That's the segment which one should be in. As I said, the spreads have not gone down. The yields have come off from say 730 or 720 to maybe 675 in the AAA segment. 730 to almost 630 currently. But if you see it from the perspective of the 10-year GSEC versus the 3-year AAA and see the spreads there, they have not come off significantly. They have also come off, but not so significantly. So that's juice continues to happen, and that story continues to develop in the corporate bond segment, whether it's a 3-year segment, 5-year segment, or even the 10-year segment.
Okay. Sunil, appreciate you joining us for this quick perspective. Thanks much for taking the time out. So that's Sunil Jhaveri recommending that debt fund investments, despite this correction that has happened in yields that has happened, might still not be a bad plan to go into. And some categories, especially, I just took a generic 3-year investment and not necessarily categorizing it to between 6 months to 12 months, 12 months to 3 years, and 3 years onwards. I just took a generic 3-year recommendation of what category in the debt funds would he recommend, and I hope viewers have made use of that. Okay, what else? Just very quickly, looking at other companies which have corrected, and I think HDFC Life stands out because of the 7.5% downtick, and this is arguably due to Standard Life's block deals that have happened and the resultant impact thereof. Mayuresh Joshi, insurance companies have had a very strong bounce back over the last 2 or 3 sessions. Today, this particular action impacting HDFC Life, would you use the weakness to buy into, or would you sit on the sidelines for the time being?
I would still say it, but anybody who's holding on, I would still recommend, I think, hold on to a franchise like HDFC Life, for example. I think, yes, there has been a technical adjustment as you put forth, Neeraj. But again, I think all the parameters that you probably look for an insurance player, and if you stack it up within the industry's peer comparison as well, I think persistency ratios, whether you're talking about the value of new business, if you talk about the value of new business margins, again, the product mix that they carry between protection, participating, non-participating as well, and the return on embedded values that they generate because of all of these parameters falling in place for them, and a qualitative franchise to look up to in terms of the bank insurance tie-ups. I think all this probably puts them in a very, very strong position. Yes, valuations, one might still argue compared to the others, still a little bit on the higher side. But yes, I think the earnings pedigree still remains strong. What comes through specifically in terms of the new tax announcements and whether a lot of the tax slabs or people within the tax slabs up to 7.5, 10 lakhs, whether they opt for these policies or not, I think that's a matter of time. But at least till at this point of time, my own take is that anybody holding on to these franchises should continue holding.
All right, Mayuresh, we leave it on that note. Appreciate you joining us today and taking us through your thoughts on markets and also a couple of sectors. And talking about the insurance space, which Mayuresh was highlighting, of course, HDFC Life is down. Reason being co-promoter Standard Life. Remember, they've been cutting down stake for last 1 year or so. Maybe a good news going into next year because this continuation of cutting down stake would also mean it is increasing the free float. It's also in the futures and options market. And a lot of reports suggesting let's wait out maybe in the next 6 to 1 year. The stock is also one of the contender to become a Nifty constituent. But other insurance companies, even the general insurance companies, ICICI General Insurance, Lombard is down about 8 to 8.5%. You've got ICICI Prudential also tumbling about nearly 5% in trade. Also want to pull up Axis Bank. It was your top gainer on Nifty, I guess, a while back. It was up 9 to 10% in trade, but that's also cooled off. Axis Bank is now up just about 5%. So, you know, some profit booking definitely visible at higher levels. And even for the indices, Nifty is now just about trading flat at levels of 86.50. But remember, if you could just pull up the futures, they were trading at a discount, by the way, when we, started the show. The discount was somewhere about 30 to 35 points. And now the futures are just about trading flat with marginal bit of premium. So keep an eye on that. That's a good thing, actually, if the discount gets narrowed. You've got Sensex, which is already trading in the red and remains to be seen. Of course, the banking stocks are doing well because of what RBI has announced today. So Nifty Bank is still holding to those levels of about 20,000. I think if you've got Sameet Chauhan still with us. Sameet, any individual stock that's popped up on your screen where you would like to take a trade?
I think a couple of stocks we have already advised. In such kind of market, you shouldn't be trading aggressively. But we are focusing on most of the defensive counters now after seeing a good 15-18% rally in last 3 days in most of the stock. So at this juncture, TCS is trading around the crucial juncture. So it's an 1840 to 1845 would be seen as important resistance level. In case if TCS manages to surpass this level, then probably we could see this relief rally getting extended towards 1900, 1920. But at this juncture, we would rather wait for this level to get surpassed.
Okay, so watch out for that stock TCS. Remember, Infosys was too active in the last few days. We've got Deepak Shenoy of Capital Mind joining us on the show now. Hi, Deepak. Good afternoon. Navneet here. Not your prophecy, but you just tweeted a while back, every time RBI cuts rates, market tends to close in the red, and we're almost flattened out so far. But still, talking about the measures which RBI has announced on rate cut, reversed repo, also CRR cut, what have you made of it? Is it enough? Also considering what government had announced yesterday?
Yeah, I think, to be honest, this is quite a trying time, so we don't know how much is going to actually be enough. But it's a start. I think what they have done is actually said that people with term loans can choose to not repay and work with their banks, and the banks will not be penalized for extending the tenure of their loan by 3 months, and then maybe back-ending the interest on those loans for another 3 months. This will only apply to banks. I don't know how much. I mean, we haven't seen final notifications on this, so I don't know whether it will apply to NBFCs also. But it does mean that people who have taken term loans from banks who have longer-term term loans will not have to pay their EMIs for the next 3 months. This is a good step. It only cash flow. The interest will still be charged, and there will still be a back-ended interest charge. So whatever interest you accumulate in the next 3 months will eventually be deducted from your EMI, and perhaps there may be an interest rate adjustment to make sure that your EMI does not go up also in the same time frame. But that will be a bank-to-bank kind of decision. But also the CRR cut is good. It provides cash to the system. The long-term LTRs which are targeted, that is actually a very interesting thing because it's already calmed down financial markets substantially. The CP and CD markets, the money markets, were frozen for the most part. We were talking about 8-9% interest rates yesterday, even for an institution like NABARD. So today that's back to 5.5 to 6.5%, which is a very good thing. To simplify, this actually helps your mutual funds a lot. So your mutual funds which have been losing, they've come back.
Deepak, I just want a clarification on that. We spoke to Mr. Mahapatra of Syndicate Bank just a while back on this move. He said it's going to be a vanilla exemption for all the borrowers. Did you just highlight that there could be interest charged for that moratorium of 3 months that they've highlighted? Or it's just like you provide a tax holiday for a certain time, it's just maybe an interest holiday for 3 months?
So I don't think it's an interest holiday. It is just a payment holiday. It's a cash flow thing. So the idea is, listen, if you owe me 1 lakh rupees and I was charging you, let us say, 0.5% of interest per month, just to give you an example, that would be 500 rupees per month that you would have to pay me on that interest. And maybe you're paying me over a period of, say, 2 years. So you were paying me something like 4,000 rupees a month or something like that. Just to give an example, I am not working the exact numbers out, or 5,000 rupees a month. In that 5,000 rupees a month, that 500 rupees of interest was getting charged. For the next 3 months, if you don't pay me, the outstanding is 1 lakh, that 1,500 rupees, that's 500 into 3 months, 1,500 rupees of interest will get added back to the principal. So you actually now owe me 1 lakh plus 1,500. And then you pay me the EMIs over a period, whatever we had initially talked about, plus another 3 months. Now, the math will work out if I reduce my interest rate a little bit to you and then still take the same 5,000 rupees, then I will be able to last. At the same interest rate, the last installment will need to be up by another 1,500, right? So to just make up for this whole 3 months. The interest will not be waived off. It is just a payment moratorium. So, I mean, if this was an interest being waived off, then the government would have to take the hit of an interest waiver, because if financial institutions are not in a position to take the hit on their balance sheet, that would be quite huge. So this is not a waiver of interest. This is just a delay of payment.
Something I think which even Mr. Rajneesh Kumar clarified. He said that, this is not interest accrual will not stop. He said it is just payable date changes. So interest accrual will keep happening. Just the date that interest will get paid at will be different. So that's in pretty clear terms that Mr. Rajesh Kumar also mentioned the same. But, I just want to focus on, a few things before I actually get back to Deepak and his views on the market. Taking a look at what the Dow futures and the S&P futures are doing right now, down in the red. So we've got the Dow futures, which are down closer to 500 points. S&P futures are down about 54 points. Coming to Europe and how the European indices are trading right now, they too are trading in the red. So you've got the FTSE, the CAC, as well as the DAX down by almost 3% apiece. FTSE 100 actually is down about 4% at this last count. CAC 40, that's down about 3.2%. DAX is down about almost 3%. So across the board, there is those varying degrees of pain that are still there. And this is on the back of the increasing number of infected cases and the reportage of that. And now you have various countries taking those measures of lockdowns for an extended period of time. There are talks about Iran stopping, in-country flights, probability of Australia locking down for 6 months, and now the possibility, and you'll have Carrie Lam making an announcement shortly, but there is this talk on the street that you could see another shutdown in Hong Kong as well. So all of those factors kept in mind. Remember, you're not out of the woods yet with regards to the global market and what damage this pandemic can do. But Deepak, just a quick take. Some people got real excited looking at the rally over the last few days. Investments, that regard, would they still, take a little amount of time before you start making any fresh deployments? Don't get too excited. Relax for a month or two. We had Samir Arora talk to us in the morning. He said, don't be in a rush. It's okay. Just wait it out for 2 months, 3 months, till you know for sure that there is some resolution to this health crisis.
Yes, hello. Did you hear me?
Yeah, I can hear you.
Yes. Sorry. Of course. I think this rally has come as a relief rally in the middle because of all the QEs that have been announced and the stimulus packages. But I think the market's going to be very volatile because this is going to be a fairly hard-hitting set of numbers. The numbers we have seen right now seem very ordinary. I mean, just looking at the getting a sense of the statistics. In India, every day, 25,000 people die. This is normal, right? So what we've seen so far in terms of deaths per country or as a whole is very small compared to just that. So I think the numbers are going to get bigger, and it's just sheer statistics that they just have to. And we will get a little more panicky when we start seeing bigger numbers. But the market will also react in that way. So there's no need to be jumping in and trying to say that, this is the bottom and therefore I should buy. You should buy slowly over a period of 6 to 8 weeks, maybe even more. The idea being that market will go up, market will go down. They'll give you opportunities on both ends. There will be lots of downgrades. There will be lots of NPAs, GDP reassessments along the way. So I think over the next 2 months is a good time to deploy money, but it's not a good time to say this is the bottom. There's going to be there's going to be a lot of volatility.
All right, indeed, there is going to be a lot of volatility, and that's exactly what Samir Arora said in the morning. In fact, a good time to listen to that piece. Very wise words of advice coming in. It's okay if you wait it out for 2 or 3 months. Cash in the hand is king. So and you have a portfolio which will make money if the markets recover. So there's no money lost there either. Listen into that conversation.
Because I feel that this crisis is not over, particularly in the United States, where it's happening in the hometown of the market, which is New York. It is pretty serious. And whatever you read, it doesn't look that it's ending or has already ended. So I think that there will be, one round of correction, and that will, depend on how the infections are increasing in the US or plateauing, and how this whole thing plays out. Because, right now, if you read everywhere, it doesn't seem that it's only a 20-day lockout and then next day you start going back to business. So I would think that there's time to just sit back and basically survive this period with dignity, rather than to think that adding so much new will make you some extra money on the side. Because I've seen in if I've been seeing the fund management industry, basically funds and fund managers get blown out of the market. And similarly, I guess investors, there'll be big collateral damage, even in our market from this for some time. So I would think it is not time to jump in. It is time to hang in there and wait for this to play out for another 15, 20, 30 days, during which time you have to see the progress related to this lockdown in India and whatever is happening in US, that it is reducing new infections, new deaths. Then you can be more confident.
Your assessment, Samir, of the downtick that we saw as well. Yes, there is a bit of a pullback, but it happened on very thin volumes. A lot of people are blaming this on algo trades and how the systems are at work right now, and it was not necessarily a rational decision for a lot of these financials to go down the way they did. You agree, or do you have a different view?
We agree separately that no normal fellow would sell HDFC Bank down 30-40% or Axis Bank and all these banks. I agree with that. But the point is that when there are redemptions, if there were redemptions, then the stocks that people have, they have to sell, because that's why I say that shorting is good. For example, when we have redemptions, sometimes we can delay our selling by instead shorting the index or shorting some stocks and basically paying out from the cash that we have while still maintaining the net that we want. So the shorting is an outlet for some people, but it can't be an outlet for an ETF if you have redemptions or a mutual fund or a country fund. So it happened, and now the recovery is also quite okay for the moment. But what I mean is, I don't think this is a situation where you say that it is over and done with, and therefore we buy every day. So we are not buying. That's what I'm trying to say. It's not that we have covered some shorts also in the last week. It's not that we are super negative. I'm just saying don't get excited, because I am not getting excited by this last 2-3 days rally. It looks a bit artificial even in US, where everyday numbers are going up, and it is not the end of the problem. And it's happening in that same set which is buying these stocks. I think it's a bit too ruthless according to me.
Okay, last 5 minutes left. We have to wrap the markets as well, so we'll make it quick. But I just want, and we'll get in closing strategies from Samit as well. But just very quickly, about 15, 20, 25 minutes ago, or maybe slightly longer than that, there's this news item about how Tata Motors board has approved the plan to subsidize the passenger vehicles, including the electric vehicles business, into a separate subsidiary through a scheme of arrangement. Essentially, Tata Motors, which bought JLR and kept cars business and the trucks business together, is now looking to separate this. It's a stock in crisis. So quick views out here, both technical and fundamental, and then we'll get into closing strategy too. First, Deepak Shenoy, quick view here. This move, or this attempted move by Tata Motors.
Okay, so I haven't read the story or the fundamentals here, but I think auto's going to be in decline for a while, and I think I am not sure about how any restructuring might work, but the stock's been beaten down, so it's a bit of a risky bet, like a lottery ticket in a way, that you bet on the fact that the company can recover. The management and the ownership is very sound. However, I don't think I'd buy it in a hurry just because of this. I want to see some action. Tata Motors has said a lot of things, but what's actually happened has not really panned out in favor of the investors. So I don't mind buying it 35% above this if they were actually able to prove that they're able to do any of the things that they're talking about in terms of actions and in terms of eventually the market coming back. But I don't think I'd just jump in right now on an announcement.
No, fair call. I was actually wondering if you had a view on the move itself. Nowhere talking about the buy, but completely understand, Deepak. It's a difficult one to any which ways buy, and this action may or may not have a necessary impact on the stock price. But take a moment to thank you, Deepak Shenoy, for joining me today and giving us your perspective. Samit Chauhan, to you, final thoughts, very quickly. A thought on Tata Motors technically, and then very quickly, your top closing strategy.
I think as far as Tata Motors is concerned, this is one of the traders' favorite counter, but unfortunately, the stock has been one of the well destroyers since last couple of years. If I have to see any particular level on short-term charts, then 70 to 73, these are the levels to watch out for. Even if this stock gives a decent bounce back, then there's a strong hurdle around 85, 90. So as a short-term traders, 90 would be the level to watch out for. As far as index is concerned, we have managed to defend 8500 on a closing basis on weekly basis now. For the coming week, for next couple of trading sessions, a range would be 8,500, 8,400 on the lower side, and on the higher side, 9,000, 9,200. These are the levels to watch out for.
Stay on, Samit. We'll take in some closing thoughts about what would you deploy as a strategy to, if this is your view. But let's quickly wrap up the markets. We are a minute away from closing. So highlight the top gainers, losers. The markets have ended flattish, you would have to say, compared to what they were doing. Coal India, Axis Bank, Cipla, NTPC are amongst the 3 or 4 names that have done well. ITC is up about 4%, so that's not doing too badly. And ICICI Bank and Kotak from the banking space, along with Axis, are the ones which have done well. What hasn't done well? Bajaj Finance, sore spot. Hero Motocorp, sore spot, about 8% lower. IndusInd Bank, about 6% lower. And Maruti and Bharti Airtel too have looked slightly wobbly. And then some of the others are charting their own course. Navneet.
Well, yep, we are closing off the day's high and markets have almost given up all the gains. I just want to pull up the turnover. Remember, we've been highlighting how the turnover has been muted on the derivative side since the time SEBI measures have come. And today also, of course, it's day one. It is supposed to be on the lower side, but it's exceptionally lower. I think it's just about 4.5 lakh crore. And I think on the cash side, definitely the turnover has picked up in the last few days. So today also we are looking at a turnover of about close to 46,000 for NSE cash. But talking about some individual stocks, you've got Bandhan Bank after surging yesterday. Yesterday's rally was mainly on account of short covering, but that move continues on the upside. It's up about closing with gains of nearly 15 to 16%. And similarly for Shriram Transport, which was up about 12 to 13% today. Aurobindo Pharma from the pharma space has had a spectacular day, and clearly markets may have corrected 25% in the last 1 month, but DMart, because of T2T category, that still maintained its mojo. So DMart locked in upper circuit with gains of about nearly 5%. And a couple of F&O gainers also I want to highlight. Jubilant Foodworks, I think, moved in the last half an hour or so, so up 6% there as well. Federal Bank, BEL, that's Bharat Electronics, also had a good session. While on the losing side, couple of losers, of course, HDFC Life had a block deal. That's the reason why the stock corrected. But remember, the recovery in the last few days for the stock was spectacular. Marico was down 4.5%. Then you had ICICI General, Lombard, United Spirits, and also HDFC, AMC falling in today's session. And from a small cap space too, you got stocks like Matrimony, which was down about 11%, and Market Breadth also, I guess, towards the end, it was just about even Steven Devina.
All right. We've got the end of the week right now, but before I go to the weekly performers, I actually want to look at the point contributors for today. So it's a TCS actually, which has done the hard work in supporting the index. That's contributed about 15 points to today's gains. ITC follows next. That's 14 points higher in the contribution for ITC. ICICI Bank and Infi are the top contributors on the upside. What's led to the downside, obviously, is Bajaj Finance. And then you have Bharti Airtel also, which has contributed on the downside in today's session. But just want to look at the weekly performances for the index today. And taking a look at what the index itself has done in terms of the gains and losses. So the last 5 days change on the index is definitely on the negative side, but not a big negative like we saw last week. So the index is down, I think, about 1%, while the gains came in mainly from Infosys. Infosys is the best performer for the week on the Nifty. That's up 12%. Kotak Mahindra Bank up 10%, UPL is up about 8%, Nestle is up 8%, Bharti Infratel, Reliance Industries came back into action. And what didn't do well this week is Bajaj Finserv, 20% knocked off, Vedanta, 15.5% gone, Axis Bank, Indian Oil Corporation, JSW Steel, GAIL, Hindalco, and the rest. Even Bajaj Finance this week was down about almost 13%. I'll just quickly get in some closing comments as well from Samit Chauhan. Samit, what is it that you're going to be watching out for? Okay. We don't have, I guess, I think we've lost contact with them. But nonetheless, it was an exciting week. We had 2 days of gains, Neeraj. So, and Navneet, it's all in all, a flat week is also a good week in a bear market.
Yeah, indeed. It's turned out actually to be a rather a week of relief, Devina, after the kind of drawdowns that we've seen. Let's just see if the next one proves to be better than the current one. But maybe it's safe to call it a day on this leg of countdown. From all of us who put this show together, thanks so much for watching. Stay at home, maintain social distancing, and stay safe.
According to a recent report, women